KrisAnne Hodges, Disciplinary Counsel for the Board of Professional Responsibility. Today we will discuss the fundamentals of attorney trust accounting in Tennessee. We will discuss Rule of Professional Conduct 1.15. We will discuss Tennessee Supreme Court Rule 43 on IOLTA trust accounting, and we will discuss Tennessee Formal Ethics Opinion 89F121. Beginning with Rule of Professional Conduct 1.15. The first and most fundamental rule about attorney trust accounting is that you should not commingle attorney funds with client or third-party funds. You have a duty to keep those funds separate from your attorney funds. Funds belonging to a client or third party must be deposited in a separate account in an approved bank. An approved bank is one that is an FDIC member and which participates in the overdraft notification program as defined in Supreme Court Rule 9, Section 29. Other than client and third-party funds, you may keep funds in the account reasonably necessary to pay bank fees. You must deposit into the trust account all legal fees and expenses that have been paid in advance to be withdrawn as the lawyer's fees are earned or as expenses are incurred. Fees that are considered earned upon receipt should not go into the trust account. A lawyer may not pay personal expenses directly from the trust account, even if the account temporarily contains your earned legal fees, or even if it contains only your earned legal fees. A lawyer must withdraw earned fees from the account and deposit them in the lawyer's own account, from which you may then pay personal or operating expenses. You will need to promptly notify any third party or client who may have an interest in the funds. You have to promptly deliver to these clients or third parties any funds to which they are entitled. If there is a dispute about the funds, whether they belong to the client or a third party, you have a duty to maintain those funds in your trust account until the dispute is resolved. There are several methods for resolving the dispute, including arbitration or interpleader and the like. According to Rule of Professional Conduct 1.15, you must maintain your attorney trust account records for 5 years after the termination of the representation. Upon receiving funds or property of a client or third party, you have a duty to promptly notify the client or third party that you've received those funds. You must also promptly deliver an accounting upon request. It is within the attorney's discretion to decide whether to deposit funds in an IOLTA trust account, which is a pooled trust account used by most attorneys, or a non-IOLTA trust account, which may be an individual trust account dedicated for a particular client. You should take into consideration a number of factors: the amount of funds to be deposited, the expected duration of the deposit, the rate of interest or yield available, service charges or fees, and other costs associated with the deposit of the funds, cost and benefit of maintaining a non-IOLTA trust account for the benefit of the client, the capability of the financial institution to pay interest to client or third persons, and any other factor reasonably likely to affect the client's ability to earn income in excess of service charges or fees. Rule of Professional Conduct 1.15 says that as long as you make the determination in good faith and consideration of those factors I just spoke about, it's your decision whether to deposit funds in a non-IOLTA account, and it will not be subject to disciplinary action. It's a good idea to regularly review the accounts to see if the duration or the amount of funds have changed so that the type of account you have chosen is still meeting those factors discussed above. Tennessee Supreme Court Rule 43 discusses IOLTA attorney trust accounts. IOLTA stands for the Interest on Lawyers' Trust Accounts. If you maintain a pooled trust account for the deposit of client funds, then you must participate in the IOLTA program. Whether or not a bank meets the requirements of Rule 43 is determined by the Tennessee Bar Foundation, which is the organizational administrator of the IOLTA program. They maintain a list of eligible financial institutions, and you can select from that list. IOLTA institutions remit the interest earned on these pooled trust accounts and report it to the Tennessee Bar Foundation. The Tennessee Bar Foundation distributes the earned interest for several worthy causes. It is often distributed for legal assistance to the poor, student loans, grants or scholarships to deserving law students, improving the administration of justice, or other programs that benefit the public. The Foundation's Board of Trustees approved awards totaling $650,000 to be paid during 2013 to 53 worthy organizations, including CASA, abuse prevention organizations, legal aid, and mediation services. Tennessee Supreme Court Rule 43 and Rule 9 requires that attorneys complete a mandatory IOLTA form annually. It comes with your registration packet. Don't forget to fill it out. Even those of us who don't maintain accounts because of government work, etc., must fill out the form. Those who are exempt from participating in IOLTA are attorneys not in private practice, judges, attorney general, public defenders, U.S. attorney, district attorneys, in-house counsel, teachers of law, or those on active duty in the armed forces or employed by state, federal, or local government and not otherwise in private practice. IOLTA accounts are not reasonably expected to produce interest in excess of allowable fees. As I said earlier, filling out your annual IOLTA registration statement is required. Noncompliance will result in suspension. We will send notices of your failure to comply, but even if you fail to pay before the suspension order is entered, fines and penalties may attach. Formal Ethics Opinion 89F121 is a wonderful basic guide on trust accounting. It helps you understand and guide you through basic trust accounting principles. 4 basic components for any trust account include the checkbook, a receipts book, disbursements, and client ledger. Because you are required to keep client money separate, a good way to ensure that you don't use client A's money to pay client B's costs or expenses is an individual client ledger. The purpose of all of it is to create an audit trail so that you can see what happened to the money you handled. It should start the moment you receive money and continue until the final check is issued. Without an audit trail, you have no way of showing what happened to the money. It helps find and track minor errors. It's important to be as descriptive as possible regarding the transactions. You should never write a trust account check to cash. Use the memo lines on checks and reconcile individual client ledgers with the main trust account statement. There should never be a negative balance in your trust account. It is a sign of negligence and sometimes theft. You either have a positive balance because you have client funds in the account, or you have a zero balance because all the funds have been appropriately paid out. You may maintain a small balance for payment of bank fees, but other than that, you have a problem if you have a negative balance. Reconciling is critical, and the timing of deposits can be equally critical. We already know that Rule of Professional Conduct 1.15 requires you to maintain client funds and property in an account that participates in the overdraft notification program. In fiscal year 2012 to 2013, the Board of Professional Responsibility received 173 notifications of overdrafts in attorney trust accounts. It'll work like this. The board will receive notification from the bank of an overdraft. We will then send a letter to the attorney from the board asking for certain documents and explanation of the transaction. For the most part, overdraft notifications never become an official disciplinary investigation or a complaint. However, if there's obvious proof of theft or negligence, then such a file may be opened. Thank you for your time, and I hope you enjoyed this short presentation on the fundamentals of attorney trust accounting.